Alright, welcome back everyone. So some of you in the comments on previous videos have asked for an update on Entourage Health Corp. This video will take a look at the preliminary Q3 revenue for Entourage Health Corp and also how the stock itself is performing. Now for those that have stumbled on this channel and are new here, it's great that you are watching the video. If you find yourself enjoying this type of content, then hit that subscribe button. New videos are posted each week. I cover the likes of penny growth and dividend stocks and also crypto. And so if you are interested, hit that subscribe button and share the video with anyone that you think may enjoy this type of content. And before we jump into the video, let's set the like goal for today's episode. So all of you watching this video, hit that thumbs up right now. The like goal we're setting is 31, so let's try and reach that goal this week. And with that said, let's jump straight into the video. And so a quick summary for anyone out there that is unaware of the brand Entourage. They're a Canadian-based company that focuses on the production of weed. They operate as a supplier, but they've also been growing out their consumer brands as of recent. And we can see the brands here, they've got the likes of Color, Saturday, Starseed, Real City, and the newest introduction of Macy's. And so on November the 16th, we will have the final results for Q3, but Entourage Health has announced their preliminary results, and it's believed to be a record revenue listed at 14.7 million. And so just to remind ourselves how Entourage Health has been performing, as with all the investments that I show on this channel, I focus on the positive and the negative. We can see that I have over 14,000 shares on Trading 212. In future videos, I'll show you how much more I hold in the entirety of this company across different platforms. I can assure you it's a lot more than 1.2k. But in the last year, we've seen the stock decline substantially. And since the beginning of October, we've actually seen this stable in the 0.12 range for US dollars. And some of the reasons why this stock has plummeted is mainly due to how they are expanding. So we've looked at these results previously. 2020, there was a big hit of negative 76 million. But we have to look ahead at the company. Of course, be aware that they do have a large amount of debt, but a lot of their debt is tied up into their infrastructure. So let's take a look at Q2 of 2021. It's the most recent figure that we have. So Q2 of 2021, we have a revenue of 10.6 million. We've got all the costs added up and then a gross profit of 350,000. Now let's compare with the latest figures. So Q3 of 2021. Again, this is preliminary. So expect this to differ plus or minus the 14.7 million. Just scanning through the document, again, we can see the revenue figure, but we're actually looking for more granularity here, and unfortunately they're not stating what the net income is, but that will all happen on November the 16th. But what we can see from the interim CEO is that, and I quote, "Over the past 4 quarters, we've continued to see improved costs, expanded margins, and more critically, continued demand for our products, all of which are contributing to a meaningful gain in market share and a consistent increase in our quarterly sales. Our Q3 preliminary revenue results demonstrate approximately 90% revenue improvement year over year as we continue executing our transformation and site optimization initiatives to bring more high margin products to market. With the previously announced acquisition of Craft Cultivator, so CanTX Life Services, expected to close imminently, we're thrilled to introduce Craft cultivars and products into our distribution network for our medical clients and adult use consumers, all of which will also bring expanded revenue for our shareholders." So there's a few pieces of information here. We've got the growth side with different acquisitions. There have been a lot of acquisitions with this company, but if we look at Q2 in terms of their revenue, it was at 10.6 million, and we're now dealing with 14.7 million. In addition, from the statement here, we can see that there's improved costs. So we do expect to see improved figures, hopefully in terms of the actual gross profit, but we can still see there's this focus on scaling up. And so they emphasize that they really want the demand for their products to continue to increase, to have that market share. And so for those who do have Trading 212 and are interested in this stock, there are limitations within the Trading 212 platform. You can't buy that many shares. You can, however, buy using the interactive brokers or IBKR. There'll be a future video talking about interactive brokers, but just be aware that it's possible to buy the Canadian stock using the IBKR platform. And so let me know in the comments below if you believe in Entourage Health Corp. Clearly I do, and although I haven't shown on this video, there's a lot more money that I put into this stock, and I have the expectation that this price will increase in the near future. For now, I have been dollar cost averaging downwards, so as the price decreases, I buy lump sums each time. That lowers my average cost. But definitely let me know what you think about this company in the comments below and any concerns you may have. As always, new videos are posted each week. Again, thanks for everyone who is subscribed to the channel. I'm aware that for some videos it's not as interesting as other types of content that I post. Again, leave messages if there's certain preferences you have. And so that's all for today. There will be more updates on Entourage Health Corp and all the other types of content that I talk about. And with that said, I'll catch you in the next one.